All right, it is 6 o'clock, so we're going to go ahead and start our Medicare webinar series, Turning 65 and Still Working. Welcome, everyone, and thank you for joining us today. My name is Carissa Evans with Community Insurance Partners. Today's presentation is designed specifically for individuals who are approaching age 65 and are still working, or who may be covered under a spouse's employer plan. One of the biggest misconceptions we hear is that everyone must enroll in Medicare at the age of 65. The reality is that the answer depends on your employment situation, your employer size, and the types of coverage you currently have. Our goal today is to help you avoid costly mistakes, understand your options, and make confident Medicare decisions. Our learning objectives. By the end of today's presentation, you will understand 3 key things. First, when Medicare enrollment is actually required and when it may be delayed. Second, how employer coverage works with Medicare and why employer size is one of the most important factors. Third, how to avoid lifetime penalties and coverage gaps. We'll also discuss special enrollment periods, HSA rules, and IRMA, which are often overlooked but can have significant financial consequences. So let's get started. Employer coverage. This slide covers one of the most important Medicare rules. The first question I ask someone who's turning 65 is, how many employees does your employer have? If the employer has 20 or more employees, the employer plan generally pays first and Medicare pays second. In many situations, you can delay Part B without penalty. However, if the employer has fewer than 20 employees, Medicare typically becomes primary. In that situation, failing to enroll in Medicare can create serious coverage gaps. I cannot stress enough how important it is to verify this directly with your HR department, that your employer coverage is credible before making any enrollment decisions. Special enrollment period. One of the biggest fears people have in missing Medicare enrollment deadlines. Fortunately, Medicare provides a special enrollment period commonly called an SEP. If you're covered under active employer coverage and decide to delay Part B, you generally have up to 8 months after employment or coverage ends to enroll. However, I always recommend acting immediately when employment ends rather than waiting. You'll typically need 2 important forms. You'll need a CMS 40B application to request your Part B to start, and the CMS L564 form. This form is to be completed by your employer and helps prove that you maintain qualifying employer coverage. Of course, here at Community Insurance Partners, we can assist with these forms. A real-life example of how this would play. Let's say Susan works until ages 68 and she decides to retire in June. She can use the SEP to enroll in Medicare without penalty because she had qualifying employer coverage while actively working. Late enrollment penalties. These penalties are some of the most expensive Medicare mistakes that we see. Part A is typically premium-free as long as you or your spouse have worked 10 years and paid taxes to accumulate the required 40 work credits. The Part B penalty is generally 10% for every 12-month period that someone should have had Part B but did not enroll. Even more important, this penalty usually lasts for life. For prescription drug coverage, Medicare allows a short grace period. However, if you go 63 consecutive days or longer without credible prescription drug coverage, a Part D penalty may apply. The lesson here is simple. Never assume you're okay delaying Medicare. Verify first. Financial considerations. This slide focuses on 2 topics that can have a major financial impact. The first is the HSA contribution. Many people don't realize that once you enroll in Medicare, you're no longer allowed to contribute to a health savings account. Even more surprising is that Medicare Part A can be retroactive for up to 6 months. That means some contributions may need to be corrected. The second topic is IRMA. IRMA stands for Income Related Monthly Adjustment Amount. It's Medicare's way of charging higher income individuals more for Part B and Part D coverage. The important thing to remember is that Medicare looks back 2 years when calculating IRMA. So let's take a look at what those IRMA income thresholds actually look like. Not everyone will be affected by IRMA, as you can see with this chart. For most beneficiaries, the standard Medicare Part B premium applies. However, as income increases, Medicare premiums increase as well. Notice that Medicare uses the modified adjusted gross income for 2 years prior. This is important for individuals who are still working, receiving bonuses, exercising stock options, or taking retirement distributions. The good news is that if your income has dropped because of retirement or another qualifying life event, you may be able to request an IRMA reconsideration. If you only remember 3 things from today, remember these. Number 1, start planning early. Don't wait until your birthday month. Number 2, confirm employer size and whether your coverage is considered credible. Never assume. Number 3, get professional guidance before making enrollment decisions. A small mistake can create penalties that last for years. Every person's situation is different, which is why we encourage individuals to schedule a personalized Medicare review. The key takeaways. As we begin wrapping up today's presentation, I want to leave you with 5 key takeaways that can help you avoid some of the most common Medicare mistakes. First, employer size drives the rule. If your employer has 20 or more employees, you may be able to delay Part B while you have active employer coverage. If your employer has fewer than 20 employees, Medicare generally becomes primary. Enrolling in both Part A and Part B at age 65 is usually necessary to avoid coverage cuts. Second, understand and use your special enrollment period. If you delay Medicare because you have qualifying employer coverage, you generally have up to 8 months after employment or coverage ends to enroll in Part B without penalty. Knowing this timeline is critical. Third, late enrollment penalties can be permanent. The Part B penalty can stay with you for life, and Part D penalties can also continue. Maintaining credible coverage and enrolling on time can help you avoid these unnecessary costs. Fourth, don't overlook HSA and IRMA considerations. Once you're enrolled in Medicare, HSA contributions must stop. And for higher income individuals, Medicare premiums may be increased through IRMA, which is based on your income that you reported on your tax return from 2 years earlier. Finally, start planning early. The most successful Medicare transitions happen when people begin planning 6 to 9 months before turning 65 or retiring. Taking the time to understand your options and getting professional guidance can make the process so much smoother. As we wrap up today's presentation, I want to thank everyone for taking the time to join us and learn more about Medicare as you approach age 65. Our mission at Community Insurance Partners is simple: to help people make informed Medicare decisions with confidence. Medicare can feel overwhelming. With the right information and guidance, you can avoid costly mistakes and choose coverage that fits your needs. If you found today's webinar helpful, we invite you to join us for one of our upcoming educational events. Our next webinar is Advantage Plan Curious. Is your supplement costing you too much? During that session, we will explore the differences between Medicare supplement plans and Medicare Advantage plans, discuss costs, provider access, coverage considerations, and help you understand which option may be the best fit for your healthcare needs and budget. The webinar will be held on June 23rd at 1 p.m. If you have friends and family members, or even coworkers who are already on Medicare and evaluating their coverage options, this is an excellent webinar to share with them. Before we conclude, remember that every Medicare situation is unique. Employer coverage, retirement timing, prescription drug needs, travel habits, income, and healthcare priorities all play an important role in determining the right Medicare strategy. If you like personalized guidance, our team is here to help. You can reach us at 251 635 0989 or visit us at cipmedicare.com to schedule a complimentary Medicare review. Now, I'd like to open the floor for questions. Whether you have questions about employer coverage, Medicare enrollment deadlines, SEP periods, HSA contributions, IRMA, or anything else that we discussed today, I am happy to help. I'll stay on for a few minutes to answer any of those questions. And I'm going to go to Patrick. Do we have any questions?
Should be in your Q&A section. Just hit the Q&A at the top.
Found it. I got it. All right. First up is, if my coverage is credible, would it benefit me to keep employer coverage and take out Medicare? Or would delaying it be my best option? Great question. So again, this is personalized, but what I always recommend is you take Medicare, see what the cost of Medicare is, compare it to your current employer coverage, and see which one is more beneficial for your budget. And we are here to do that for you. You just can call, make an appointment, and we can look at that. How long do I have to make a decision after I leave my current job insurance? So my recommendation is do not go past 60 days because we do not want you to have a Part D or medication penalty. Can CIP help me with my Medicare enrollment forms? Absolutely. We can print those forms for you, walk you through the process of how to fill out the CMS 40B, and give you the L564 to take to your employer, and then we can assist on where you actually need to turn those in. All right, those were awesome questions. Thank you so much. And again, I'd like to thank you for joining us today. We appreciate the opportunity to be a resource for you and look forward to helping you navigate Medicare with confidence. We hope to see you on June 23rd. Y'all have a great night.